Good evening, traders, and welcome to a brand new video. In this video, I want to quickly look over a trade that we took on GU today, and just want to explain to you why we looked for shorts today. And this is going to touch up on the daily bias and getting a daily bias and how to know where price is most likely to trade to. And then we'll be looking at entries as well. So this is a top-down analysis video looking at the daily 1 hour, 15 minutes, 1 minute for entries, and also the 5 minute for those that work and trade, um, like myself as well. This will be good for you as well to get a grip on entry techniques and how to approach trading while working as well. Not yet sure. Well, obviously, when this video is out, there will be a title to this video. But currently, as I'm recording this video, I'm not yet exactly sure what the angle is going to be with regards to title. But let's dive in and have a look at it. So first of all, let's do the top-down analysis. So we can see from the daily we are in a downtrend. We really don't need to look too far back, but if we zoom out, we can clearly see, it's very clear to see the price is moving towards the downside. We can see price trending towards the downside. So overall, just from a visual point of view, the structure is towards the downside. We can just, not using the weekly, but it's just important to note that the weekly did print a lower low. So if we look, this was the last low, and we can see the weekly candle traded below the previous low. We made a lower low. So even on the weekly, price is pushing towards the downside. So back towards the daily. This is now where this is kind of the most important time frame for me. And if you understand the daily, if you understand where the daily could be trading to, then you can easily know if you should be in a trade or if you should not be in a trade. So first of all, what do we have here? So price had this push towards the downside. So let's get the marker. We create this high. We pushed towards the downside. We broke this structure. Then we started pulling back. We only created these equal highs up here. And then price created another leg towards the downside, breaking this structure. So now our most recent high and low, this high, let's just get this high and this low. That is our most recent structure towards the downside. So first of all, that we can apply some tools like premium and discount. So we can take the high and we can take the low. And we know, and this is what we know, what we teach and how we trade, is that everything above the 50% is considered premium, and everything below the 50% is considered discount. Discount to what? Discount in relation to what, you might ask? Well, the simple answer is discount in relation to the price above. So if we look at the price level exactly, specifically, we can see the price level, and we can see a price level below here. We can see, if we place a tool in the middle, we can see a price level as well. So basically, this portion of price action below this price level to the right over here is cheaper than the prices above this line towards the upside, towards this level 34391. These prices are more expensive compared to prices below it. Why is this important? Well, we've said this in many videos, and the concept remains the same. You will always take something that is expensive and sell it, and you'll buy something that is cheap. So if it's expensive, you sell it, you get more money for it. If it's cheap, you buy it so that you can sell it again for a more expensive price. So keeping that in mind, we now can see the price pulled back up into this area of imbalance. So technically on the daily, usually when we use this tool, we want to see price trade back into a discounted area where we then look for sells again. So price came back into this imbalance area between these wicks, this high, so this low and this high, those 2 weeks. We can see that in that area, there was only down movement, only down candle. There's no up movement inside that range. So that is an area of imbalance. We can see the price returns to rebalance that price level, and we see the reaction towards the downside. So this is where we start, and now we can start to frame our trades. So it's unlikely that we are going towards the upside, going to turn bullish, because our daily idea is for the daily time frame to go lower. If we are to go lower, then we would want to see price reach for previous lows. So where can we see the most previous lows? It's very obvious. We can see to the left all of these previous daily lows. What's below all of those lows? Well, the answer is liquidity. We have liquidity resting below all of these lows. And that is important to understand. And we'll make another video specifically focusing on liquidity again. But this video, I've just decided the topic will be Forex for beginners top-down analysis. So we are on the daily. We're going to do a top-down from the daily down to the 1 hour, down to the 15-minute, down to the 5-minute, and into our trade for the day. So now that we have an idea of where the liquidity will be, check that video later on, where more on liquidity, we can now anticipate price to potentially move towards the downside to reach for this liquidity. But we also have, let me just show this out. We also have this high up here, and we have this high up there. Now you might ask, why won't we be going for these highs again? Well, first of all, I doubt the price will go up higher into an area of imbalance liquidity where price has already reached into. So price has been in this area. It traded in this area. It rejected off of this area and pushed towards the downside. So we can safely say that it's more likely to go lower, not going up into this area again. Then we can also have a look at this week. We can see that previous day, this is Friday, already traded above this area, took the liquidity above this area, and we rejected towards the downside. So this is a concept that we have been teaching and showing in the Discord channel and the Telegram group and everywhere around. Is if we have a high and we see price sweep that high and we see a push towards the downside, that is typically a reversal pattern, and we would expect price to go lower. So if we have a high, we sweep that high and we move down lower, that is a sign for a reversal. Now we can see price sweep the liquidity above this high and we trade it towards the downside. So now the expectation is for price to trade lower down towards these areas, all of these lows on the lower time frame, and potentially fill up all of this liquidity that we have over there. So we're just gonna quickly go to the 1 hour, and then on the 1 hour we're gonna look at the price action at just after Asian session. So that is important. After we've done the daily, we'll be looking at the 1 hour around Asian session close. Okay, now that we're on the 1 hour, we can look at a few things. So first of all, we can see the move towards the upside that filled that imbalance on the daily, and then we had this push towards the downside. Then we kind of just consolidated, moving sideways. But there's some clues inside of this price action as to what is occurring. So we're gonna have a look, have some bit of a deeper look at that price action. So let's just get that up in the screen. So what can we see? We can see price push towards the downside. We have a pullback, and we create these equal highs. These are beautiful equal highs with liquidity above it. So we can just mark this as liquidity. Then we see price run up towards this highs. And why is it doing that? It's seeking the liquidity to fuel a move towards the downside. What do we get? We get this big displacement towards the downside. This big move lower, that signifies that price is intent on going lower. Then we have another pullback. We see price pulling back into this area of supply and demand. That video is still to come. It's Forex for beginners, supply and demand. It's going to be in this series, don't worry. And we see price come back into this supply area, and we see the reaction towards the downside. Pushing down, and that's all of Friday's price action. Price is just really dumping towards the downside. Now we need to look at where price can potentially hit on from here. So we want to see price go lower. Can we get now a pullback and then a further push towards the downside? So that's the idea, and that's the framework that we have in mind. So going then on the 15 minutes, we need to mark out a few things. So first of all, we anticipate Frankfurt Open. Sorry. Frankfurt Open at 8, and then London Open at 10. So those are the main areas that we need to look at. So on the 15 minutes, we can still see prices pushing towards the downside, and we can just look at some of the order flow. We can see there is an area We might have something in that wick. And then we have this one. And then we definitely have something on in that wick as well. We're going to look at that in just a bit. So I'm just going to show you. We're going to get down to Frankfurt Open. So this is where Frankfurt Open. Now we can see we have a big push towards the downside. We potentially have this as a key area where price could return to. We have that supply area. Why is that a supply area? Well, it's an area where price initiated a structure break. So there we have a structure break below. So we have a structure break towards the downside. We see price push down, and then we're expecting price to pull back and then move down lower. So I'll show you now in the 5 minute why these areas are important as well. So let's do that right now. Just delete this on the 5 minute. So again, this area is important because it initiated a structure break as well. And usually price would return to those areas, but that's all that we need to focus on now. We have this one as well, the one that I showed, and then this most recent one. So we're not exactly sure where price is going to return to, but that's not a problem because we need to see something happen at one of these areas before we can anticipate a move towards the downside. One of the key elements to my trading plan is that I need to see a sweep of the previous high or low and then displacement. So what do I mean by this? I need to see price create a high. I need to see price trade above that high, and then I need to see price break down lower. So I need to see this pattern. So I need to see that high form. I need to see price sweep above it, and then I need to see this big move towards the downside, which is then the displacement in the direction of the sales that we want to take. So that's something that we need to see. So for now, we don't need to worry about any of these areas until price reaches into those areas, creates a high, sweeps that high, and then we can look for potential entries towards the downside. So then we need to look, we see price come up, come up, come up, right up into this area. So now we have this area. Now we could have potentially taken a trade from this area, aggressive, and then targeted that first low. So that's the first tradable idea. But now that we have created a high, we have not yet swept any significant highs to the left. Maybe this high, but this high, why isn't this not a significant high? Because this high didn't break any structure. This is maybe a high, but it's not a significant high. So this is more of a significant high. This is just some minor substructure. So this could maybe have been your first entry. But the safest bet is first to see that sweep of liquidity, because then we get a push down. We get excited. People get excited. Price is going to go down. But people have sold here. Stop loss is just above. So what's now above this area? We have more liquidity. Let's make this orange. There's no more liquidity above this area. Reason for price to go towards the upside. So we're expecting now first to see price sweep these highs and then break down, and then we'll look for the retracement up into this area and then take the trade towards the downside. So we still wait patiently. There we have a move, a sweep towards the upside. So we can, by this time, we can clean up some of these areas. We can see that price has now swept the highs. Now we need to see price move towards the downside. We need some impulsiveness. We need to see structure breaks towards the downside. Otherwise, there's no valid or available trade on the card. So then there's nothing for us to do. So we first need to see price break below some of these areas. Note that I'm doing all of this on the 5 minute time frame, which is important. So let's see. Then we can see price breaking down towards the downside. So you might have gotten in on a trade up there for some other reason, but that's besides the point. Now we identify where is the last candle that pushed price towards the downside. We have this area over here. That is then our supply area. And we also have imbalance, this imbalance area, which is very crucial. The expectation is now to see price trade back up into this area, slowly tap this area, and then move towards the downside. We don't want to see price impulsively move up. We don't want to see this. that's a bad sign. We want to see price slowly get back up into this area, slowly trending back towards this area. Look, we see price making its way back up into this area and perfectly taps into our zone. Stop loss just above, and we target these lows. So obviously this is now the entry for those working. So you see on the 5 minute, you see price has created this area. We see the structure break towards the downside. It is in the direction that we want to take the trade towards the downside. If you just look again towards these lows, we want to see price reach for all of these lows. So we can just put the line over there and over there. So we want to see price really reaching for those lows ultimately. So you could obviously then frame a trade like this and really up your risk to reward. So now that we have a basic idea, we have a pattern, we have a sweep of the high, we have an displacement towards the downside, we have our 5 minute area, we have imbalance, everything is set for us to take this trade towards the downside. I just want to note and show you the 1 minute 1 minute price action that I noted. Again, we can refine this area potentially towards that area. Potentially you might then have missed the trade, but anyway, we can see price. We're now interested in this action. So if you want to wait for a 1 minute confirmation, there we have price breaking the first structure over there. And this was caused by this little candle over there. So there is your 1 minute, and we have our stop loss just above this high. So this high should be protected now, and price should not trade above this high if this trade is going to be valid. If it goes above it, then we don't want to be in this trade. We can see we tagged into the trade, a little bit of drawdown, and immediately price starts to shift towards the downside, and we can see price starting to melt. This is a very good sign. Now we see a follow-up displacement. So this is very key. There's our first displacement in the direction of the trade that we want to take. Now we see the follow-up displacement. And we want to see this to confirm our trade bias. If price continues to push down and then we get maybe a little pullback, we don't need to be afraid of that because that is just a little pullback before price continues further towards the downside. The same that it did over here. Big displacement, pullback, followed by some more a follow-up displacement. So that's what we need to see. We see displacement, continuation further towards the downside. We don't need to fear any pullbacks because ultimately the daily will prevail and the daily direction will prevail. So there you have a beautiful 20-hour trade. If you had a 3.5 pip stop loss, just targeting 67 pips, you get a beautiful 19-hour trade. So my trade looks something more in the line of this. I only took 10-hour. So this was my trade that I took. You can ask me for the trade record and the entry and everything. I will show it to you. So this is not a hindsight play. This was a real life trade. Even showed in the community as well. So absolutely a wonderful trade. So there you have an idea, more or less, on top-down analysis into a trade idea, and then taking the trade based on higher time frame ideas. So we take the daily idea, the ideas on the daily time frame, and we transpose them, and we take that idea that we have on the daily of a direction, and we apply that to the lower time frames, and then we look to trade in the direction of the daily, which is very important. Guys, that's it for this video. Hope you enjoyed it. Make sure to like and subscribe, and be on the lookout for more educational videos. Have a nice evening.